Welcome to Profiletraders. This is Reza and you're listening to my market analysis for Friday, June the 19th. As you're all aware, last week we had the FOMC meeting, and when it came to the decision making time, the Federal Reserve backed down from their muscle flexing about hiking rates. And as I have explained many times, Federal Reserve has absolutely zero option to touch rates under the conditions that the economy is at. The fact that you have a very strong dollar that is hurting many exporting companies. The fact that the economy has retracted to a negative growth last quarter. The fact that every other country is cutting rates to devaluate their currencies against us. The fact that we are approaching $20 trillion of debt that needs to be serviced. The fact that the consumer is maxed out on their debt, mainly financed by 0% interest rates. All these things combined make the possibility of a rate hike below impossible. But dishonest as they are, of course they talk from both sides of their mouth. Whenever it's convenient, they send one of their dogs out there talking about how they're gonna hike the rates sooner than later. It was supposed to be 3 months ago, it was supposed to be June, now it's supposed to be September, now it's supposed to be end of the month. Just stop this BS nonsense with your crap of hiking rates and just for the purpose of manipulating this goddamn casino. Let it go. What rate hike? There is no rate hike. We hike the rates, the first one that's going to go bankrupt is ourselves. How are we going to service almost this $20 trillion of debt ourselves? How? So at first, market went into euphoric push up. Then it reached to a point where people started to realize what's the positive here. It is not something new. The Federal Reserve has been embarked in this quantitative easing, pumping, doing whatever they can, buying trillions every single day, putting money into this market. And this is the chart. This is not a new move. It's nothing new. We know Federal Reserve is the biggest gambler, market manipulator that we have ever seen. So this chart is now starting to become tired. This move is tired. You don't believe me? Look at the chart below, which is your effective volume. How much money is exiting out of the market at these highs. And we are now stuck. It's been since December to month of June that we are trying to bring in new suckers into the market to make it go higher. We are trying to bring in more grandpa, grandma with their savings into the market to make it go higher, and we cannot. And at the same time, shrinkage of participation. This is an extraordinary bearish looking chart. And God protect this market the moment we are going to come down, break this trend line and close below 2060, the game is over. Wide open to a drop first towards 2000 and then a drop towards 1950, and once we clear this 1950, hello 1800. So one must be very careful with this market here. It stinks like a rot fish. Very dangerous market, all created by the criminal Federal Reserve. All of it. It's all Federal Reserve engineered Ponzi scheme. And like all the other Ponzi scheme, it will break. It's a matter of when. As of right now, downside objectives that I have are this POC at 2089. After that we should come and hit 2080, and then after that the big red line in the sand, 2060. Once this 2060 breaks down, we should then see a full-blown nasty massive correction to kick in. And as for now, the 2120 is absolutely critical, extremely important level of resistance which I do not see at all to be breached to the upside anytime soon. So as long as we remain below this 2120, the downside of this market is exponential, and any pushback to the upside, in my opinion, is a sell. First level of resistance should come in at 2107 to 2110. If we can clear that, then it's possible we are going to go tackle the rotational part that we saw right around 2115. But I do not see under no circumstance a break of 2120 anytime soon. As for crude, we are building value and accepting price around $60. But if I look at the daily chart of this crude, it is starting to become extremely bearish to me, because we have had a push up. We are now trading back and forth around 60. We have been unable to exit out of the resistance line that you can draw by connecting the two contact points up there. And if we continue to remain within this zone of this two trend line, it's a matter of time that we should come down for a retest of the bottom side of this pennant, and a touch of 55 is required. Of course, if we manage to break out of this triangle or pennant with a massive surge in price and volume, it's very possible that we are going to go retest this high here right around 64. But I do not see any reason why crude should fuel or should explode up unless something completely crazy comes out of the Middle East. Other than that, based on supply and demand, based on the fact that every single economy in the world is in a mode of shrinkage right now, I absolutely do not see any issue with the supply side. There is plenty of supply out there. First level of resistance now is at 60.40. Second level of resistance is coming in, if I can kind of combine these three tops here and give a average of about 60.70, and then 61.30, and then 61.80. On the downside, two very visible POCs are flashing down there, the blue lines, 58.40, 58.40, and then 57, most likely about 57.80. These are the two short-term targets to the downside. If we can break these two levels, then I told you my downside objective ultimately is about $55 to $56. As for gold, I believe last week I sent out an analysis saying that I was extremely bullish with gold, and that it was one of the most grotesquely oversold asset if we take into consideration all this excessive printing, the fiat money, the stock market bubble, all the other dishonest Ponzi's undertaken by all the Federal Reserves of this world. This asset was extremely undervalued, and that's when I gave you the warning. We were at 1170 and change. and I was looking for a touch of 12.25, and we are on our way. Now obviously after this big push up, this part of the profile has not been challenged on the downside, which makes this move to be looking pretty legitimate now. And as long as we remain above 1194, I am expecting to see my 1225 any given day. This looks like a very bullish formation up here, and it's a matter of time that if we exit out of it, there will be much more short covering, and once we breach above 1206, we should then go straight towards 1225. Obviously a lot of these things this week will be subject to what happened with Greece and the decisions and what crisis management they will come up to fix the issue over there. I'm sure it will have some impact on gold, so keep a very close eye on this debt crisis that is taking place with Greece. Thank you for listening. This was Reza with Profiletraders.com. If you wish to join, you can get all my courses and 1 year to my trading room, all for $550. Thank you.